Hello folks, this is Jimmy Nelson from Nelson Financial with an educational economic update for April 2018. In this month's video, I'll discuss some of the major headlines that influenced markets in March. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Markets in March continued February's volatility as major domestic indexes whipped back and forth between losses and gains. When the first quarter ended on March 29, the NASDAQ was up 2.3% for the year, but both the Dow and S&P 500 posted losses for the quarter, the first time since 2015. Between January and March, the S&P 500 gained or lost at least 1% on 23 different trading days. That didn't happen in single time during the same time period in 2017. Reflecting these fluctuations, the Volatility Index, or VIX, a popular gauge of risk and fear in the markets, increased by 81%. The VIX hadn't increased that much since 2011. So what happened in March to contribute to this volatility? A lot. One critical development is that President Trump enacted tariffs on steel and aluminum imports for a number of countries. He also approved tariffs designed to punish China for stealing intellectual property. These actions created concerns about a trade war, and markets dropped in reaction. Drama in the tech world also affected stocks. In 2017, the tech industry outperformed other sectors throughout almost the entire year. By the end of March, however, unfavorable news about some key tech companies contributed to the sector dropping 4% for the month. During the month, we also received reports that housing starts missed expectations in February, and retail sales reports came in lower than expected. But March provided positive perspectives on the economy. For example, the latest reading of 2017's fourth quarter gross domestic product came in higher than anticipated. Between October and December 2017, the economy grew by a 2.9% annual rate. The latest data also showed that personal incomes are on the rise and consumers have room to increase their spending even more. On March 21st, the Federal Reserve raised interest rates again and reinforced its perspective that the economy continues to grow stronger. In addition, last month marked the 9th anniversary of this market cycle's bottom. The milestone means that we're in the midst of the second longest bull market since World War II. So, even when we experience more market volatility like we did last month, we can still say that we've come far in the past 9 years. As new developments arise and the markets fluctuate, please remember, while volatility may feel unpleasant, the movement is normal. So that's it for this month's educational economic update. Again, this is Jimmy Nelson with Nelson Financial signing off for the month of April 2018. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 863-676-7995. We're always happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.